Welcome back to Factful Finance, your go-to space for demystifying the world of finance and turning it into a game plan for success. Ever wondered why some investors seem to consistently thrive in the stock market while others struggle to keep their heads above water? Well, you're in the right place. Today, we're diving into the 5 essential rules for successful stock investing that can make the difference between success and failure. Whether you're just starting or already have a few trades under your belt, these principles will give you the clarity and strategy you need to get ahead. Before we jump in, a quick reminder. This is for educational purposes only. Any suggestions made here don't imply endorsement of specific apps or products. Always consult with a professional for personalized financial advice. Now let's get to it. The stock market may seem complex, but when you break it down into clear, actionable steps, you can navigate it like a pro. So let's get into the first rule for stock investing. Rule 1, start with a plan. Many people dive into investing without a clear strategy, hoping to get lucky. But luck is never a sound strategy, especially when it comes to something as volatile as stocks. Whether you're looking to build long-term wealth or save for a specific goal, having a plan is the foundation of everything. Ask yourself, what's your end goal? How much risk are you willing to tolerate? And most importantly, how much time are you willing to commit to managing your investments? Take a page from successful investors like Warren Buffett, who always emphasizes the importance of a well-thought-out strategy. Real-world example. Let's look at Ben, who decided to invest $10,000 in stocks with no clear strategy. He ended up jumping from one hot tip to another, and after 2 years, he was only up by $1,000. Compare that to Amelia, who set a clear goal of saving for retirement and committed to a diversified portfolio. 5 years later, Amelia saw her investment grow by 40%, thanks to her disciplined, long-term approach. Rule 2, diversify your portfolio. Imagine putting all your money into one stock. What happens if that stock takes a nosedive? You lose everything. Diversification is key to spreading risk. It involves investing in a variety of assets, stocks, bonds, real estate, or even commodities, to ensure that your portfolio can weather different market conditions. Diversifying isn't just about quantity. It's about investing across different sectors, industries, and geographical regions. Real-world example. Olivia's portfolio is spread across tech, healthcare, and consumer goods. When the tech sector took a hit, her healthcare and consumer goods investments helped cushion the blow. In contrast, Noah had all his money in one tech stock. When the company faced setbacks, his entire portfolio tanked. Rule 3. Understand the companies you're investing in. This one is a game changer. Successful investors don't just buy stocks because they're trending or have high potential returns. They take the time to understand the companies behind the stocks. Do they have a solid business model? Are their earnings stable? What's their competitive edge? Before you invest in any stock, dig deep into the company's fundamentals, such as its financial health, growth prospects, and management team. Remember, the stock price doesn't always reflect the true value of a company. Real-world example. James invested in a tech company based solely on a friend's recommendation. However, he didn't look at their financials or competition, and when the company missed earnings projections, he lost a significant portion of his investment. In contrast, Lucas took the time to research a similar company, examining their quarterly reports and growth strategy. His investment returned 30% in just 1 year. Rule 4. Invest for the long term. Stock investing isn't about quick wins. If you're in it for the short term, you'll be exposed to the volatility of the market, and the chances of panicking during a downturn are higher. Successful investors have a long-term perspective. They understand that the stock market goes through cycles, and with patience, the value of their investments will grow. This is why it's important to think of stocks as a way to build wealth over time, not just make a quick buck. Real-world example. Sophia invested in a well-diversified portfolio and left it alone for 10 years. During that time, her portfolio grew by 75% despite a few market dips along the way. On the other hand, Elijah tried day trading, frequently buying and selling stocks based on short-term movements. He made some money initially, but eventually lost big when the market became volatile. Rule 5. Stay calm and stick to your strategy. The stock market can be emotional. There will be days when the market crashes and panic sets in. But if you've done your research and developed a solid strategy, your best course of action is often to stick to it. Successful investors know that the market's fluctuations are normal and part of the journey. They focus on their long-term goals rather than short-term setbacks. Emotional decisions, like selling during a market dip, often lead to regret. Real-world example. Harper faced a downturn in her portfolio during the COVID-19 market crash. Instead of selling her stocks out of fear, she held on and even bought more shares at a discounted price. 2 years later, her investments were up by 60%. Meanwhile, Alexander panicked and sold off his stocks, locking in his losses and missing out on the subsequent recovery. Conclusion. In conclusion, successful stock investing isn't about getting lucky. It's about having a plan, diversifying your portfolio, understanding your investments, thinking long-term, and staying calm when the market tests your nerves. By following these 5 rules, you can increase your chances of success and avoid the common pitfalls that many investors face. Before you go, let me know, what's your #1 stock investing strategy? Drop it in the comments. If you found this video helpful, be sure to hit that like button and subscribe to Factful Finance so you don't miss out on more tips to reach your financial goals. And hey, we think you'll find the video on screen next really helpful as well. Take a look. Thanks for watching, and until next time, keep your finances factful.